Alright guys, welcome back in this first video of the mentorship of 2024. So, I wish you a happy new year, and I wish that this year is very good for you in all realms that you wish for. It only takes a year, to change the course of your life and to make your trading or professional career go into other levels. So take this year as a pivot, make the best out of it, and of course the same for this community. I want also to thank you for your trust, because you're in this mentorship, you're willing to learn. I'm gonna do a shout out to Lavin, because Lavin is someone I've learned in my trading journey, who's very a very good person. He's also in his own path to become profitable in trading. I want to congratulate him on having his first payout with Top Step. I think it's the one of many. It's the beginning of his route, and congratulations, brother. So let's go back into the markets, right? So let's start with DXY. In DXY, I will leave my annotations coming. I will post my annotations after I show you this. So you can see these consecutive up close candles, which are bearish order block. And if you take this, let me just use this, you will see some stuff. Don't get mixed. Don't think, just follow through, right? So this first monthly bearish fair value gap is what I mostly use as far as PD arrays. I love fair value gaps. They're just my own bread and butter. But if you take these up close consecutive candles, as I've mentioned, you're gonna see that the bodies were also struggling to cross this order block formed by these candles, which aligns pretty well with what we got underneath. So if you have many different ways of looking at the market, know that if you respect the principles, they are likely to work. So let's go back into this. I just wanted to show the order block formed by these up close candles. And so I highlighted this monthly fair value gap. As you can see, we really struggled to get even into consequent encroachment. And so that really held up a good narrative as far as higher prices in November, December. Okay, so we've attained some sell side liquidity that was resting below these lows after the month of December. But in January, this led us to expecting a retracement as far as the XY. Let's go on to a weekly chart. So if you take this bullish fair value gap and you extend it to your right, this is on August 15, 2022, you take this and you can definitely see why it has been a key level for price action. I prefer this one because you can see and you can range inside of it as far as premium and discount, and you can definitely see that we were really struggling to get above this consequent encroachment of the fair value gap. We even tried to touch it here on October, but we couldn't. We just melted and respected this beautiful fair value gap. Now let's go back more closer. So you're gonna see this. I'm gonna go into a little bit more detail after we go into the daily chart, but keep in mind that if you would have taken the weekly fair value gap, well, yes, you could have been definitely be having a pretty good, level and expectations of as far as price. So you could have probably put a sell limit here, a sell limit above here, and your stop would have been at this level. But that is an extremely wide stop, right? So what I prefer to do when I see these kinds of gaps, which, as far as the weekly levels, these are kind of small. And it's not that I dislike small gaps, it's just that, no pun intended, it's just that this, I prefer to go into the daily. I'll show you why. So let's delete this thing. Because this is the mentorship, right? You're in here. You want to have advanced concepts, so I'll try to do my best into incorporate them when I can. So here's why I preferred the daily one. Okay, so if you look at this, you might be asking, what are you doing by taking this low instead of this low in a fair value gap, right? Well, when the price is going into a market maker sell model, which was already perceived here, and with order flow of previous weeks, and there's a weekly, there's a daily volume imbalance here, and the gap overlaps with another gap, and we've just taken sell side liquidity forming the gap, you can do this. Okay, so this is a lot as far as information in a sentence, so you can rewind and I'll repeat again. So if we've taken sell side here, if we expect order flow to be expanding lower, which is classic of the market maker sell model here, you could definitely take the two gaps and only create one big fair value gap. Yes, you can do that. You can do that. And you can also take this volume imbalance and extend it to your right. And we're gonna go into smaller time frames, but I'll just keep this like this. So when we get into next week, I am expecting something here, right? I'm expecting some beautiful action to happen in this level. Let's go into a smaller time frame. So 4 hour. You can definitely see that by taking this, the daily fair value gap that we struggled to get above consequent encroachment. We did a mohawk, which is totally admissible. A good mohawk, nothing really wrong about that. And then we started rejection very strongly. Why is it a rejection that is strong? It's not because of the size of the body. It's not because of the allure. It's not because of emotions. It's because we took sell side here on a 4 hour chart. So if we take sell side and then we react from a key level of premium array, as this is right now, well, this is a market structure shift that is valid. Now, can we expect a retracement here? It is likely, but is it more likely to just touch again this volume imbalance or this level of the inefficiency and go lower? Definitely more likely. So as first narrative, I think Monday we can start gravitating higher and trying to fill this inefficiency. On the 4 hour chart, you have this fair value gap here. Maybe touch 0.5%. I want to see the reaction here. So I want to see at 50%. I want to see at the top how we react. If we go there overnight, which I'm not going to be trading, I will be very, very interested in seeing the reaction in this volume imbalance, which you can see on the 4 hour chart. It's still there, right? So everything lines up. So if there's this displacement here, I'm going to wait and see what we do here before trading. I want to also pair the economic calendar into your trading, because let me put it on your screen. If you look on this weekly profile that we have, well, we have Monday, Tuesday without news. That is not very favorable as far as trading, and we also have somewhat high important news along the week. So on Wednesday, we have the 10-year bond auction, which is going to influence our very good friend, the 10 years bond yields. And we're going to have the 30-year bond auction, which is also going to affect yields. Needless to say, CPI is extremely important in this macro environment. The market is almost at a all-time high. We retraced as far as previous weeks, and now we might be looking to get a little bit more above, closer to these levels of the all-time high, and we'll see that in a second. Going back to here, let's go on the hourly chart of what we had this week. So you can see Tuesday was an off day, was a holiday, so we opened Tuesday. I don't usually trade this past week because if we go back on the economy calendar, we had NFP week, and non-farm payroll is one of those weeks that you want to trade not at all, or you want to reduce your risk, because most importantly in this environment, like we might people having strong opinions about if we're gonna have a recession or if the economy is gonna get better than expected faster. So NFP is definitely something you want to be careful as of now. We could definitely just ignore these, and if you're more advanced, you can play these. I have played NFP weeks in the past. I have made money in those weeks, but for the amount of times that there's a good week versus there's a bad week, it's probably like 1 out of 5 NFP weeks that is tradable, and even then, it's not easy. So I don't recommend it. Like if you have to plan your schedule, you might just want to do something else or reduce your risk to the minimum. So that's why I was not keen into trading this week. So Monday nothing, the day after NFP an expansion. Okay, pretty good retracement, right? Because we've been melting since a lot of time. Retracement higher. We had this move at 9 p.m. I believe this was led by, let's see, can we find something? German, probably some other news or like a bond auction. If someone can pin that in the chat of what exactly happened, I forgot, but it doesn't even matter, right? Because I believe this happened in 1 second. Like if I really go into the smart time frames, I'll leave that up to you to look what happened here. But yeah, NFP week, typical, right? We had an expansion higher. We went to the Excel stops of these people here. We went up to lows of these lows. We went again higher, touched this daily inefficiency that I've highlighted you before, and now you can definitely see why I took the two overlapping fair value gaps, because the first one would not have allowed you to see this kind of level of precision. Look at how the body's respected right now. They're pretty good, right? So I recommend you to do the same, not every time. Remember the parameters that I gave, the conditions that I gave in order to use these two fair value gaps. And the more you go into ICT learning, the more you're gonna see, these kinds of signatures, right, in price. And take note of it because it's extremely important. It can do or can make your level, like, of course, if your narrative is already that, for example, prices are gonna get higher, you know that like 50 points, 20 points is not gonna make a difference, but it can still shake you around. Like if you're a beginner and you have a PD array, like you have a daily fair value gap that is highlighted, well, you're gonna struggle if you don't highlight the proper PD arrays, right? And so this is an advanced PD array overlapping two fair value gaps with a volume imbalance, so pretty good. We had this move here, 8 o'clock, Friday, 5th of January. I think that there was news here. Let's see. Employment change, unemployment change, NFP. There we go. NFP. Right. So, boom, NFP grabbing buy side liquidity here, trying to get some of these buy stops here, filling of this inefficiency. So after touching the midpoint of the daily PD array that I've highlighted, we melted. And the reason I'm not putting it as a daily fair value gap, it's because it's kind of like a different array, but it could basically look like this, right? So daily fair value gap, and then the volume imbalance. Okay, perfect. Let's go somewhere else. As far as yields, monthly chart, we had the consolidation manipulation here, trying to break these lows, and distribution here. We are retracing right now after reacting to this original consolidation. If you take these candles bodies and you put it to the right, bodies should know, like, if we're gonna go inside the original consolidation, we should not go below 50% if you expect it to be a retracement profile. So this is also something you can keep in your books, and that's exactly what happened here after touching this daily. This is daily, I'm pretty sure. Oh, monthly volume imbalance. There we go. So for the yields, everything's in place. It seems like we're reacting pretty good. Of course, if we go into the weekly charts, let's see what we have here. Yeah, again, this fair value gap hacked in here. Original consolidation, market maker model. Boom, boom, boom. We have this fair value gap here that was filled. So if we go back and retest this consequent encroachment of the yields, I will be definitely interested. Again, this could happen because we have the yields auctions and we have a short week of 2 trading days that there's no week in there. So I would keep my trading very low this week. Also because people are going to try to build sentiment in the marketplace. We're starting a new year, so people might want to, well, more market makers might try to lead you to think that this is going to go in a direction in a very easy manner, which is probably not going to happen. So if we start off Monday and Tuesday melting, I would not trust that at all. And the same thing would go for if we start going higher and higher. I would not trust it as much as if the profile was different, right? So going back into here, nothing of interest, but just wanted to show you what we had during the week. So Monday, consolidation, expansion. Wednesday, chop. Tuesday, classic NFP week. Not a profile was respected, but we had a good reaction based off price and structure of this CE of consolidation. Let's go into NQ. So NQ is very interesting. We are close to all-time highs, right? So there's definitely gonna be people, hopefully not you and I, that go long and have a very wide stop and aim for these highs. These people might be targets for market makers. And so that's why after we hit this level, I expected a retracement and I played short up to this target, which was 16,544, something like that. You can see it on the first video of the foundation course, and it was like 100-point move, so it was a pretty good move. And it was expected because we touched this weekly for value gap. I believe we went up to a premium of 75% near. Let's see, 5.5. Let's put it this way. Let's show you the 0.5. Yeah, so we were kind of close to it. Yeah. 0.5, 0.75, 0.25. Yeah, so it would be the opposite, but you get what I mean. We were very close to 0.75 and then just melted after crossing CE. So pretty nice retracement expected. And if also you go onto the monthly chart, well, you're gonna see that the low of the wick of this monthly candle that we're having right now on the first week almost touched the 50% of the monthly inversion fair value gap, which is a reclaim fair value gap that I'm going to use. So this fair value gap, I want it to respect price. I want bodies to maybe go into here, maybe go into here again, but I want body hopefully to close above 50%. And it's even better when you look at the weekly because we have this breaker here. So the last up close candle, which fits also perfectly with this monthly inversion for value gap. So I like to take PD arrays that fit with higher time frame PD arrays. They just make me more confident on my trading and they make everything smoother. If we go on to the daily chart, you have the initial consolidation for the market maker buy model, which is here. So definitely, if we go into this part of the monthly inversion fair value gap, I would be kind of interested into seeing a wick here, because this could be a good buy limit as far as now. So if we go into this discount, I will probably be switching to look for a smart money reversal on lower time frames here, and then go and switch for longs. Until then, here I'm neutral. I'm not gonna risk a lot. I'm gonna wait until Wednesday, even Thursday, to see what's gonna happen, because there's no news today or Tuesday, right? So let's be safe. We just came out of NFP week, and it's the beginning of the year. People are gonna try to make sentiment, as I said, so be more careful than what you usually do. And as you can see, also the wick of this daily candle touched the low of the weekly bullish fair value gap, just showing again how important is the level for us, right? So that was it for this week. Keep in mind of these events, because they could definitely be elements of manipulation. If you're trying to build narrative, I recommend you to use these as either expansion or manipulation, depending on how we are in the charts. And that's it. Well, that's pretty good. So use the private chats the more that you can. I thank you again and wish you a good one. Stay safe.